Advanced Micro Devices is changing hands near $515.80, hovering just below its session peaks as retail investors scroll through financial feeds trying to digest a breathtaking 130% year-to-date surge. Standard financial media frames this move through the lens of a simple binary narrative, the eternal underdog fighting for scraps in a market dominated by NVIDIA. Open up Robinhood, check StockTwits, or watch retail-focused YouTube streams, and you will see the same superficial debate playing out, traders arguing over whether AMD can steal another point of GPU market share, or if its valuation has stretched too far past the $780 billion market capitalization threshold. But while the retail crowd obsesses over quarter-to-quarter market share percentages and headline price targets, they are missing the profound architectural transformation happening at the silicon level. The real story of AMD today is not about catching a rival, it is about a fundamental physics and memory bottleneck that is choking modern artificial intelligence scaling. As large language models balloon into hundreds of billions and soon trillions of parameters, the primary constraint on data center economics is no longer raw compute speed alone, but the memory wall. Training and running inference on frontier models requires moving massive volumes of tensor data back and forth across high-bandwidth memory stacks. NVIDIA engineered a brilliant empire on a monolithic proprietary ecosystem, but in doing so, it created a massive financial and physical pressure point for hyperscale cloud providers who refuse to be locked into a single supplier's margin profile. AMD engineered its way directly into this friction point. With its latest iterations of the Instinct Accelerator series and the CDNA architecture deployed in massive production clusters by Meta, Microsoft Azure, and Oracle, AMD did not just build a faster chip, it solved a critical density and memory capacity problem. While the street focuses on short-term price fluctuations, the structural reality is that hyperscalers are executing a multi-vendor supply chain diversification strategy out of absolute necessity. They need an alternative capable of handling multi-terabyte parameter sets without breaking power envelopes or blowing up total cost of ownership. AMD's architectural choice to lead with massive high-bandwidth memory capacity, offering up to 288 gigabytes of HBM3E running at blistering speeds, means that for specific high-density enterprise inference and training workflows, AMD Silicon is no longer a fallback option. It is the mathematically superior choice for memory-bound workloads. The market is still pricing AMD as a cyclical semiconductor stock, completely blind to the fact that it has entrenched itself as an indispensable gatekeeper of modern AI infrastructure. Zooming out from the ticker tape reveals a fascinating tug-of-war across daily trading volumes and institutional order books. Over the past few weeks, AMD has demonstrated staggering momentum, characterized by explosive post-earnings buying surges and heavy capital accumulation following a massive $4.75 billion multi-tranche fixed-rate bond issuance. Wall Street institutions are using this capital injection alongside strong cash generation to aggressively fund capital-intensive data center and AI expansion without flinching at short-term macroeconomic jitters. Yet retail traders continue to get aggressively shaken out by sharp intraday swings. Every time macro inflation jitters or treasury yield fluctuations trigger a tech sector pullback, weak hands panic sell, mistaking normal consolidation for a broken thesis. Beneath the surface volatility, institutional heavyweights are systematically scooping up shares during these dips, treating every macro-driven sell-off as an entry window into a multi-year secular compounding story. The options market is currently pricing in substantial underlying movement, with implied volatility reflecting the sheer scale of ambition behind upcoming platform ramps like the Helios rack-scale systems and integrations with foundational labs like Anthropic. Institutions are positioning themselves not for next week's options expiration, but for the multi-year infrastructure build-out that will define enterprise technology through the end of the decade. How are you playing this structural expansion in your own portfolio? Are you actively accumulating shares during macro pullbacks, or are you sitting on the sidelines waiting for a deeper technical correction before making your move? Let us know your strategy in the comments below. To understand why institutional smart money is aggressively backing this valuation, you have to completely purge the outdated historical framing of what AMD used to be. For decades, Wall Street pigeonholed advanced microdevices as a cyclical, low-margin runner-up in the PC and laptop CPU market, a scrappy competitor forced to engage in brutal margin-slashing price wars with Intel while relying on volatile consumer gaming cycles. That legacy narrative is completely dead. Today, AMD is an enterprise-grade end-to-end compute powerhouse, spanning high-performance CPUs, advanced accelerators, networking fabrics, and software stacks. The financial transformation of the company is starkly evident in its operational mix. The data center segment has surged to account for roughly 58% of total revenue, doubling year over year to $6.7 billion in a single quarter. This was propelled by the relentless enterprise adoption of EPYC server processors, which continue to capture lucrative market share in cloud data centers due to superior core density, power efficiency, and socket compatibility. At the same time, the Instinct accelerator franchise has graduated from an experimental alternative to a core pillar of the world's most advanced cloud infrastructure. When hyperscalers deploy tens of thousands of accelerators into production environments, such as Meta's massive fleet or Microsoft Azure's enterprise clusters, they are buying into a comprehensive hardware-software ecosystem built to tackle the heaviest compute loads on the planet. While the legacy consumer segments like gaming experience normal cyclical cooling, the high-margin, high-durability enterprise data center engine has completely re-architected AMD's financial profile, turning a former commodity chip maker into a structural compounding machine. Looking out over the multi-year horizon, AMD's growth trajectory is underpinned by massive compounding catalysts that dwarf short-term noise. The commercial rollout of rack-scale systems like Helios, combined with deepening strategic collaborations with Tier 1 cloud providers and frontier AI labs like Anthropic, positions the company to capture an expanding slice of the multi-hundred-billion-dollar AI hardware total addressable market. Management's aggressive roadmap targets sequential acceleration in data center sales, with expectations for the segment to scale exponentially through 2027. However, an objective analysis must reckon with structural risks. The semiconductor space is famously capital-intensive and geopolitically sensitive. Supply chain choke points, particularly advanced packaging and foundry allocation at TSMC, remain critical variables that could constrain output if demand accelerates faster than manufacturing capacity. Furthermore, any sudden cooling in capital expenditure cycles among mega-cap tech spenders, the trillion-dollar hyperscalers funding the current AI infrastructure, would instantly ripple through the semiconductor ecosystem. Execution risk on the software side is equally vital. Expanding and refining the ROCm software ecosystem to ensure seamless developer adoption remains an ongoing battle against deeply entrenched proprietary software moats. Yet, when you weigh these execution challenges against the sheer magnitude of global compute demand, the macro thesis becomes clear. Mega-cap tech giants are locked into an existential arms race where underinvesting in AI infrastructure is far more lethal to their enterprise survival than overspending. AMD sits squarely at the center of this secular spending wave, as one of the very few entities on Earth with the engineering pedigree, manufacturing partnerships, and intellectual property to supply silicon at scale. For investors with the vision to look past quarterly earnings turbulence and short-term price volatility, AMD represents a masterclass in technological turnaround and long-term wealth creation. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.